Time now for an in-depth look at the market action this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Women's University. Professor Kim, thanks for joining us today.
Good afternoon, Devin.
Good afternoon. Well, the story yesterday when Wall Street stocks got slammed was that the Fed's rate cut made investors nervous, but overnight it seems the rate cut had the opposite effect because the Dow was up almost 1,200 points. What's happening here?
On Tuesday, which is on March 3rd, U.S. Fed executed on emergency half percentage point rate cut, and markets slid about 3% in a single day. That reflects investors' fears on coronavirus epidemic is raising recession risk in the U.S. economy. But U.S. market surged on Wednesday for positive political factor, a strong Super Tuesday performance by former Vice President Biden, and a growing signs of a coordinated response to coronavirus reassured very sensitive investors. All U.S. market indexes increased over 4% in a single day, which is one of the largest increase in history in a single day.
Right, and ultimately rather connected to other things than the rate hike. So, but
right.
We do see Korean stocks up now for a fourth session in a row. What's driving the Korean market?
Today's domestic market is pretty much affected by U.S. market. Positive wave from U.S. stock market has generated another positive wave in Korean market. Kospi increased by 1.26%, and Kosdaq also increased over 1.32% in a single day. Domestic individual investors became very active buyer in today's market, but domestic institutional investors and foreign investors sold domestic stocks.
Well, now, with the U.S. cutting rates, the Bank of Korea held an emergency meeting with BOK Governor Lee Ju-yeol hinting at a rate cut here, too. When might that happen?
Well, U.S. Fed's 0.5% interest cut is a preemptive action against possible downturns of U.S. economy and global economy. It was actually the first rate change in between scheduled Fed policy meetings since 2008. Financial crisis. So it tells us how seriously U.S. Fed is watching the economic impact of coronavirus. So therefore, it is highly expected that Bank of Korea will follow U.S. preemptive action sooner or later. And if they decide to move fast, they can cut interest rate before April's regular meeting.
Right. Well, in the meantime, the Korean government has put together an extra budget worth around $10 billion to fight the coronavirus outbreak. But should this be a concern in terms of the government's fiscal soundness?
Of course, there are some concerns on rising government debt, but this is time to put the first policy priority on expansionary fiscal policy for saving economy. I believe that 11.7 trillion won supplementary budget is not large enough compared to previous supplementary budgets of SARS and MERS. As far as I remember, government provided 7.5 trillion won over SARS in 2003 and 11.6 trillion won on MERS in 2015. If I recalculate these figures in terms of today's price level, SARS supplementary budget becomes 11 trillion won, and MERS supplementary budget exceed 12 trillion won respectively. So these times, 11.7 trillion won is almost the same as previous supplementary budgets of SARS and MERS.
Well, Professor Kim, we have the numbers out now for the current account surplus in January, and it was a lot smaller than a year ago. What do you see there, and what's going to happen when the impact of the coronavirus comes into play?
January's trading data do not much reflect the effects of the coronavirus outbreak. I think the major reason for January's trade surplus decrease would be related to Lunar New Year's holidays are included in January for this year. But trading figures will be much worse in February because the impact of coronavirus outbreak will be fully incorporated from February's data. So there will be large decreases of export and imports together from February's data.
Yeah, the question is just how big will those declines be? But all right, Professor Kim, thanks so much for making time today. We always appreciate it.
Thank you very much.